Welcome back. So today I'm going to talk about the Texas housing market and its potential challenges. So with that in mind, let me share my screen, and here it is, the headline by Housing Wire. The headline says, two charts that explain why Texas housing markets have stalled. What they mean by stalled? Let's dive deeper into this. And so the tight supply in the wake of the pandemic has turned into an inventory glut. Relatively cheap housing, low taxes, looser COVID-19 restrictions, and an influx of major employers turned Texas housing markets into hotspots after the pandemic began in March of 2020. Of course, areas such as in Austin in particular was just absolutely booming, absolutely skyrocketing, where home prices grew during the pandemic around in some areas of Austin, like 50 to 60 to 70% appreciation, which is, as we look back, it is not sustainable. So Austin is going through a collection as an understatement. And I know short term, it could be a challenge for Austin Metro, but long term, they'll be fine, according to my estimation, because Austin is the Silicon Valley of the South, right? While Houston and Dallas and San Antonio didn't experience the same pace of price appreciation, they benefited from the same dynamics that pushed Austin to the moon. But the momentum in Texas have stalled. What does that mean? Over the past 6 months, home prices have fallen in all four of the state's major metropolitan areas as the extremely tight inventory that defined the years of following the pandemic has loosened considerably. By the way, if for those of you who are watching, if you've been in the real estate for any length of time, real estate is local. There's no such thing as national real estate. Each neighborhood, each block, each zip code is vastly different from one another. Let's continue. Median price year over year in Texas metro markets: Dallas, Houston, San Antonio, and Austin, the big four of Texas. Let's go over the median price year over year. In Dallas is pretty much flat year to date, November 29th, 2024 from November 29th, 2023. Whereas in Houston, the year to date home price are minus 1.1%, and San Antonio minus 2%, and Austin is minus 4.5%. So yes, Austin going through a correction. This slight decrease in median price year over year is nothing. There's can't draw any conclusion from it, right? In a short term. So we need more data down the road to determine what this kind of data pretty much will reflect. All right. According to Alto's research, this dynamic is painfully evident in data collected by Alto's research. And so the year over year median price change in baby San Jose, okay, housing wise calling Austin baby San Jose, turned negative at the end of 2022. If you witnessed the end of 22, the mortgage rates have skyrocketed from the beginning of 2022 from like 4% to like close to 8% in October 22. So in May of 2023, the annualized decline bottomed out at a hefty 13.2% in the Austin Metro, baby San Jose. So consequently, prices at the start of 2024 turned positive again, right? So prices coming back in Texas. But since then, they have settled into a pattern of yearly decline in a range of 4.5%. We're talking Austin Metro, okay? One doesn't have to wade through weeds of housing market data to figure out why. Year over year inventory growth in Austin tripled and quadrupled for much of 2023 last year. Inventory growth peaked at a shocking 345.8% in April of 2023, more than 3 times back in April of 2023 in Austin Metro. So let's go over the inventory from all those four markets year to date, month to date. In Dallas, Metro, by the way, look, in case you have not heard, Dallas, there are more than 8 million people that live in Dallas. It's a massive mega metro. In fact, Dallas is the fourth largest metro in the country. Number one is, I think, New York City. Number two is Los Angeles. Number three is Chicago. And number four is Dallas. Just so you know, Dallas is absolutely growing for years to come, in my estimation. All right. Okay. 70% more inventory year over year in Dallas, year over year. And in Houston, 30% in listings year over year. In San Antonio, 23%. And finally, in Austin, 14%. Look over here. Back in April 21, 2023, the listings has skyrocketed in Austin to 340%, right? Yeah, that's what's happening. We know is it can't sustain itself. This skyrocketing housing price gain, what goes up must come down. Really? It must come down maybe a little bit, not drastically, I don't think. But anyway, Dallas has experienced the highest year-over-year inventory spike of the three other major Texas metros. It topped out in April 23 at 189.7%, slightly besting San Antonio at 188% year-over-year rise in May 2023. And Houston had its inventory growth peak at 135%, right around the same time. So in 2024, inventory gains have been fairly steady. In June, growth in Dallas settled in about 85%. Austin's increase has fallen from 28% in August to 14% today, while Houston plus 30% and San Antonio plus 23% continue to see relatively modest growth. Look, here's my takeaway, okay? Then I want you guys to share. What is your takeaway? So we are, based on the data I just shared with you, all the four major metroplex of Texas, it is a buyer's market. It's around 4 to 5 months supply of inventory after all dust has settled. So if you look at the economics 101, demand versus supply. So it's the four Texas markets is kind of an equilibrium. The demand pretty much equals supply. When you look at 4 to 5 months supply of inventory in these four markets, the last estimate that I looked into recently, so it's a little bit of a buyer's market, all right? This excess inventory, this excess listings hopefully will be absorbed as we move into the early part of 2025. I wouldn't panic based on these kind of data. Texas have a lot of inventory in many of these major metros, but still the economy and housing market is still pretty resilient. And people are still moving to Texas, not as much as during the pandemic, of course. But if the mortgage rate come down to 6.5% to 6%, sometime in 2025, we're going to see more demand surge. This excess inventory in the Fort Texas market will be absorbed by this excess demand. Maybe. We don't know, right? Again, not a panic. It's not a doom and gloom situation. Texas, the big picture is going through a correction. In some markets of Texas, it is doing well, and I will talk to you about it on future videos. It's all about the local market. It's all about specific zip code. Every zip code, every neighborhood is very different from one another. So myself, as an investor, we help investors buy positive cash flow properties in the best markets in the country. And Texas is one of the areas that we are pursuing, and we find some great local submarkets that are doing very well for mom and pop investors who wants to buy low entry points houses so they can buy cash flow properties, invest for the long term. Anyway, as I leave you, so again, share with me your comments, whether you live in Texas or somewhere else in the country. Please comment below what are your thoughts around the data I just shared with you, pros and cons. I'll be more than happy to respond to those comments. If you've received any value whatsoever from this video, please like and subscribe to my YouTube channel. And also put your email on my website below so you can become a free member of our real estate investing community. By doing that, we'll receive daily updates about real estate investing opportunities in many markets in the country. Thank you so much for watching and listening. And I will see you on the next video shortly. Bye bye.